$50-mile-an-hour headwinds. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of November 23rd, 2020. And that's, of course, in the United States, Thanksgiving week. So the markets will be closed on Thursday. But we got, a couple trading days. We got some stuff going on here. So let's talk about it. I say 50-mile-an-hour headwinds. I'm quoting Alan Greenspan, Maestro, and he said that in 1991 in testimony before the Senate Banking Committee in the recession that was going on at that time. And who knows what the recession in 91 was about, right? That's so long ago. Since then, we've had the dot-com crash, we had the housing bubble, and now we got COVID. But there was a recession in 91, and he was asked, what was holding the market and the economy back, and he said 50-mile-an-hour headwinds. And I'm a big fan of Alan Greenspan. He's a very quotable guy. He was the first rock star Fed chair, and he did it for 20 years under 4 presidents. Bit of trivia: Reagan, Bush 1, Clinton, and Bush 2. So pretty long tenured Fed chair. And he engineered the soft landing after the dot-com bubble. And again, pretty quotable guy. And just to quote him again, in the 80s, he said, this is great, I have learned to mumble with great incoherence. If I seem unduly clear to you, you must have misunderstood what I said. What a great comment from an economist. And it makes me think back to another quotable fellow who was Harry S. Truman. And after receiving briefs from several economists who would say, well, on one hand, this, and on the other hand, that. And Harry Truman said, what I need is a one-handed economist. So enough quotes. I said 50-mile-an-hour headwinds because I think that's what the market is currently facing. After the good news on the vaccine, the market rallied just, quite a bit. And since then, it's gone absolutely sideways. And what do we have in front of us? Well, we got 50-mile-an-hour headwinds. If you think about what's going on geopolitically and economically, we got, Mr. Biden is, by all accounts, going to be, the electors are going to be certified, the votes are going to be certified, they're going to do their thing, and he is the president-elect. We got Georgia kind of hanging in the balance. It looks like the Senate's going to stay in Republican control, but that is not a done deal. So we got some uncertainty until January over the balance of the Senate. And now we've got really intense spikes in COVID cases. Of course, the vaccine's coming, but that's going to, earliest that anybody's going to get it's going to be in December, and it's going to take months to really get that distributed and, get to this point of herd immunity. We've got pretty radical rollbacks and lockdowns and things being imposed on, Americans, businesses, communities, and even in their homes, which is just unprecedented. And those things ripple through to businesses across the spectrum. So, in the COVID world, there's some businesses that benefit, and there are some that are, going out of business. And that's really, really, really sad. And we've also got the specter of some structural things going on in the market that are interesting. CNBC calls it some under-the-radar hurdles that could trip up the stock market into year-end. And so what this is lots of mutual funds are really, really big buyers of stock, and they have a lot of them are balanced. If you in your 401k or whatever, you hold these mutual funds, and they're balanced equity, fixed income, and we're going to hold 60%, large cap stocks and the rest in fixed income. Well, the market's been up this year. The NASDAQ up over 30%, the S&P up over 10%, and so they have to rebalance. And in order to do that, they have to go, sell some stock. And we also have Tesla being added to the S&P 500, the largest valued stock ever added to the S&P 500. The market cap is the largest ever, double what Berkshire Hathaway was when it was added. And so that causes index funds to have to rebalance. And in order to buy Tesla, they got to sell something else and balance. So even if the economics don't change, there's some structural things that could cause some selling in the market. Mutual funds rebalancing their portfolio mix, index funds rebalancing based on new entrants like Tesla to the index. Now we've got a historical rise in the indexes between Thanksgiving and Christmas, about a 1% rise. Over the last 10, 15 years, historically, the indexes have drifted up a little bit. But we've also got some structural things and some headwinds that could cause it to go down. And so right now the market, you can see the S&P 500 is going absolutely sideways. I would look for signs of these headwinds to take effect. The selling pressure from mutual funds, the rebalancing of index funds, and the impact of COVID, probably to see the market go down. Look for sign, you don't want to bet on that yet, but we got a few weeks before the end of the year. And if you see it start down, if it starts to go down, it's going to gain momentum and multiply. So there could be some opportunities there. I think it will either pick up some momentum to this downside or continue sideways. So that's a lot of information. There's a lot going on, a lot of moving parts. I don't have a crystal ball, but I'm watching for signs that those headwinds could kick in and cause a year-end pullback against the seasonal pattern. We'll see. Could be wrong. I'm not going to bet the farm on it, but if the opportunities show up, we're going to try and take advantage of them. So I hope you found that interesting. And again, send me your questions, your comments, your feedback. I try to respond to everyone. All right, thanks.